Hey guys, do you think that investing is only for the rich? Well, it's not. In fact, it's the thing that people do to get rich. It's the vehicle or the tool that is available for anyone who is willing to learn. The question is where to start. There are plenty of financial resources on the internet, but not all of them are legit. Therefore, without any experience, how can you tell a bad advice from a good advice? For starters, one of my favorite authors, the author of the book The Psychology of Money, he said that anything providing certainty in finance is most likely a bad sign. He also added that, with the exception of the FDIC insured assets like our money in their banks, there's really nothing certain in the world of finance. I may have rephrased that a little bit, but there is one more item that I thought was pretty certain in the world of finance. It's those insurance that we pay to our insurance companies, like the car insurance, home insurance, medical insurance. All of those, sometimes they get taken away automatically from our account. So those to me are pretty certain. Wouldn't it be nice to be the collectors of those premiums? Oh wait, I am, and you could be too. I collect premiums in the stock market by making promises to either sell the stocks that I want to get rid of or to make promises to buy the stocks that I want to own. This process is called option trading, and I use it to either enhance my investments or protect my investments. If you want to learn more about that topic, my website is provided in the description below. But going back to our question of how can you tell a bad advice from a good advice, red flag number one is certainty. The future is just unpredictable, so any financial advice that does not consider the risk of loss is probably not trustworthy. To learn more about this topic, watch my previous video about gambling versus investing, which I'll link to the end of this video. Red flag number two is if it's non situational. Is the advice tailored to your specific situation? Does it consider your overall objective? For example, if someone recommends a stock to you without considering how well you know the company behind that stock, and if the stock fits your investing objectives, then I would not recommend trusting that advice or that advisor. Another example is if somebody advises you to invest on a house without considering your financial situation or how much knowledge you have about owning a house. I would consider that a red flag too. By now, you're probably thinking, okay, now I know what to generally watch out for. Now tell me what to generally look for. The best advices are not the ones that would give you the next hot investment. The advices worth taking are the ones that would teach you how to look for the next hot investment. So, metaphorically speaking, learn how to fish. Learn a process that speaks to you. There are so many ways to invest, and there are many different types of investments. For me, the easiest to learn and the one that could be practiced is investing in the stock market. Wise men